All right. Hello, everyone. Mark here. Thanks for joining me for another Greenbridge Investing Market Analysis. This is a live stream, so if you're new and you're not sure how this works, please make sure to share the symbol or the market that you'd like to see so that once I complete my portion of the analysis, I can take a look at the charts or the markets that you're interested in. Okay, so I will get to the chat, once I complete my analysis. All right, so anyway, nice to see everyone. HS, good to see you. Alice, hey, how's it going? All right. I know I had a question from Michael in the chat room, which I'm going to answer as well. So let's get into it. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. Now, before I begin, real quick, I just want to mention that if you're new to Greenbridge Investing, our YouTube channel, please make sure you subscribe to the channel. Also, if you like the video, please press the like button. I see I have a couple of likes. That's nice to see as I'm starting out here. And make sure you check out our website at greenbridgeinvesting.com. We have a signal service, a swing trade signal service by text, by email. We also have a chat room, and we have portfolio management ideas by email. Andrew updated our track record sheets, so things will be a lot more organized, and you can see, the kind of work that we do. We have a 7-day free trial, and our prices are changing this week. So this is your chance to lock in the prices that we have right now. All right, I'm not going to spend a lot more time on that. I've spoken about that a lot. All right, hey, Arizona, nice to see you. Okay, cool. So let's get into this. Now, today is Monday, as you all know. And on Monday, we always check out the economic calendar because it's just a good thing to do, right? So let's see what's going on here this week. This is especially important for Forex or even gold. Now, we're starting off the week here, with Japanese GDP. Okay, that's usually not a big market mover. We have the European tomorrow at 5 a.m. Eastern time, Euro or European GDP, the quarter over quarter. Then we have year over year. That, again, it can move the euro. The euro has been nothing but relentlessly strong. It even gives these fake out sell signals, which we could take a look at, real quick. But Forex has been tough because it hasn't been producing any good swing trade signals. If any signals are appearing, they're going to be on smaller time frames, which is something that we don't cover. So it's been a very tough environment for at least 2 months now, with the euro and the dollar not really providing any clear signals, even though the euro had a nice breakout, the pound had a nice move, and all that stuff. Okay, but we'll talk about that. Also, what do we have here? Chinese consumer price index. That's not a big deal. Canada, they're having their rate statement. What is that, on Wednesday at 10 a.m.? Not a big deal. Not a major market mover. If you're in any Canadian pair, it could have an effect. But again, these numbers, I have not seen any dramatic moves in a while. A dramatic move could be 100 pips, 150 pips in like 5 minutes. Okay, 12.10 at 7:45. Okay, so Euro has their rate decision. Again, that can have an effect on the euro, and something we want to keep an eye on, especially since we're looking for a pullback. I mean, I would like to buy the euro if it would pull back. I'm really not a big fan of selling it, even though it looks like it's in an area it wants to pull back. Those counter trend trades are tough. Okay, as you know, with the pound, we had that pound short recently, which gave us a hard time. We got stopped out of it. Then they're having a monetary policy statement and press conference. Again, that's just going to really affect the euro. I wouldn't worry too much about U.S. stuff with that. Also on the 10th, we have the consumer price index for the U.S. Again, these aren't major market movers. Council meeting, yeah, a bunch of paper pushing there. Okay, nice. And then what do we have here for Germany? Harmonized index of consumer prices. Okay, yeah, not worried about that one. Michigan consumer sentiment index. I wonder if we could trust any information that comes out of the state of Michigan. But anyway, that's on Friday at 10 a.m. Again, that's not a big market mover. I don't see any NFP, which was the week before. And NFP didn't really have much an effect, by the way. There was really not much that came from that. Also, I don't see any FOMC meetings. those are potential market movers. They could move the stock market, they could move currencies, they could move everything. So there's really not a lot of heavy stuff on the economic front, at least. Okay, so that's all good. Let's talk about, what I want to do in today's session is I want to talk about Bitcoin, and I also want to address the situation with the potential Santa rally. And we had a question about it in the chat room earlier, about sneaking through the resistance. And that was a good way of describing it, because it can be a very tricky market in these situations. So I want to address that as far as the Nasdaq and the S&P and what that means for the stocks that we're looking at. Okay, so let's first begin with Bitcoin. So Joe wants to know about DKNG. Sure. So again, everyone, please put your symbols in the chat now, so that once I finish this, and I'm going to try to keep this brief. I'm 5 minutes into this. I want to see if I could do this analysis in like 10 minutes so that I can spend more time on the charts that you want to see and answer your questions. Okay, so now Bitcoin. I sent out a trade yesterday, a swing trade to go long. Now that long was at, what was that, 19,625, and we did not touch that number. That's why I use the buy stop, okay? Because now I've been going against. I've been against taking longs in this area. So why now why did I send out a long trade idea? Well, here's the thing. When the market goes vertical, I don't like those situations because you can get faked out. Now, after the market goes vertical, this is where we have to make an adjustment, okay? Because again, that's a very important part of short-term timing and long-term timing, is you have to be flexible enough to make adjustments. Why would I make an adjustment? Well, for one, we touched the reversal zone, okay, up here in this 20K area. We touched it, we rejected it. The thing is, this type of rejection, and especially after a second type of a rejection that's holding 18.5, I would expect a swift sell-off, okay? I would expect sharp selling. We're getting no sharp selling, which means no one is selling this thing right now, and people keep absorbing it. Okay, fine. So that can be interpreted as a sign of strength. Not only that, not only do we have that resiliency, but we have a consolidation that's developed up here, this mini consolidation. That is compelling enough. When I see this type of consolidation, even if it's on a high, this trend there's nothing bearish about this trend. So if it breaks the consolidation, there's a chance that it will squeeze and push through, the reversal zone area, and we can see, an attempt at the 24K, which is our next target on this thing. That's all within reason as long as these structures hold. Now, if 18.3 gets taken out, 16.3 gets taken out, then that changes the story, because then we're most likely in a range. I would be interested in a buy at 16.3 or the low 16s, but right now, my point is this. You have to adjust to the structure as new structure develops. This is a new piece of information. We have a consolidation near a resistance. Often, when a price lingers at a support or resistance, like for example, this is a strong market and we're lingering at a resistance, that is a sign of strength. And you have some people that are trying to short this or whatever. They're going to get squeezed. But if anything, you're going to have more buyers jump in on the breakout. And the key, as I've mentioned in the chat room earlier, the key is the follow through. Okay, this may have an attempt breakout, right? An attempted breakout. It may, activate our order, and now you're sitting there long, and you're like, okay, cool. And after it does that, it needs to go vertical. Okay, if it does not, and you get a pin bar or you get a bearish close in this area, that is not a good sign. So remember, when it attempts to break out, it's going to suck in a lot of longs. More longs. There's enough people long this thing, more are going to jump in. If it fails to clear this area, all those longs are going to be sitting there wondering what to do. Okay, so when they start banging it out, that's usually when you get that dramatic sell-off. You don't want to get caught in that. That's why I hesitated to even send this out to begin with. But I'm just pointing that out so that if you see that situation and it fails, then at least you should have some perspective or some idea to perhaps make an adjustment to your trade, maybe reduce your position size even further, or maybe just bang it out and take a small profit or a small loss. Now, is it possible to get faked out where it pops up, fakes out, gets you out, and then goes higher? Yeah, that's possible. But the thing is, when this type of breakout occurs, there should really be no fake out here. It should go. Just like the breakout over here, right? It just pretty much broke out and pretty much has not looked back. Okay, it had this little pullback here, but when it goes, it should go. So I wanted to point that out. And I think reaching, if it can clear, reaching its first target of 1,000 points higher should not be that hard for this thing to do. All right, so I just wanted to point those things out for Bitcoin. Also, who's that? Is that Andrew? Using our name? I hope it is. Okay, anyway. So now keep this in mind with Bitcoin. When Bitcoin gives such a signal, if you're watching any of your favorite altcoins, they should follow. Okay, so something like Litecoin, right? LTC USD. Right now, I mean, Litecoin's not giving us anything here right now. Okay. Oh, thanks for joining us, Andrew. I was hoping that was you and not someone breaking into our account. Okay, so like Litecoin, if Bitcoin breaks out, like for example, Litecoin should be doing the same thing. Okay, that's your leader, Bitcoin. So there may be a buy signal earlier in Litecoin, but we can't rely on those because if Bitcoin fails, this is going to fail too. I just want to highlight that again. I know I've talked about that a number of times, but it's very important to keep that in mind and to remember that Bitcoin is the leader, no matter what altcoin you're looking at. And if the altcoin that you're looking at has not been acting relatively strong, like for example, let's take a look at something like Link. Right, LINK USD. I mean, this thing has not been acting relatively strong. I wouldn't expect much out of this, okay? Especially the way it's been behaving. Link should be doing a lot better than this relative to where Bitcoin is. So just a couple of things to keep in mind. All right, so let me get off of that and let's get into the stocks and the stock market. Also, HS, real quick, just something before I switch. You had asked a question on Friday about what altcoins would be good to invest in, or any altcoins that that had potential for the long term. And I gave you that really long answer about none of them, right? But one thing you may want to consider, because I thought about that more after I had a couple of days to think about it. And one thing you might want to consider in that regard are stocks related to this space. Like for example, there's one called Riot. RIOT, which is Riot Blockchain, for example, something like that, because there may be more potential there. One advantage to using a stock rather than an altcoin is something like Riot, which is it's on a regular exchange. I think it's on the Nasdaq. They have to at least answer to some kind of reporting standards, right? Some public reporting standards. So you can see, if you want to look at their reports, their income statement and whatever else they publish, you can at least see how the company's doing, what they're doing with their money, what they're doing with their resources. And you have a much better idea if they're, something that has potential or not. All right. So at least you have that oversight over someone like that, as opposed to an altcoin where they can just do whatever they want and promise whatever they want, and it doesn't matter because there's no oversight. That's one thing to keep in mind with those. Also, if you're looking for instruments that don't require a ton of money to get into, but have a lot of potential to pay off, because basically that's what you're asking about an altcoin, something that's really cheap, right, that you could make a decent investment into, and if it goes somewhere, it turns into a big reward. Well, options offer that type of opportunity on a regular basis. Okay, we've seen, like for a quick example, and I'll pull up the chart real quick before I talk about the other stocks real quick. Now, Jumia, I want to give you an example. Back in October, around there or whatever, you could have bought, because I remember we looked at this, you could have bought a January 2022 call, the $15 call. Now remember, Jumia was at $8. The $15 call was $2.50 or something like that, okay? The $15 call, which was basically what, $7 or $8 out of the money at the time, and it was worth $2.50, $250 per contract, right? So you could have bought one contract for $250. When it made this move, okay, over the next, and that, again, you had basically a year and a half of time. When it made this move to whatever, $40, that same contract went from $2.50 to like $23 or $24 per contract. That's huge. That's like a 20 times your investment return, okay, or whatever, something like that. So just to kind of give you an idea, options are the best way to go for something like that, not altcoins, okay, because altcoins are purely like a lottery. Okay, anyway, so I just wanted to mention that real quick and just give you a continued answer to your question. Wow, what a long answer. All right, now let's talk about the NASDAQ real quick. Yeah, it's nice to see Andrew here. He never comes to these things. Okay, so if you have questions for Andrew, you can ask him too. All right, so let's take a look at the stock market real quick because we had a question in the chat room. And Michael, I am going to get to, I know Michael's not here, but he says he's going to watch this another time. I am going to get to SPCE once I start answering the questions in the chat. So let's talk about this real quick because the question in the chat room was, what about the Santa rally and sneaking through, okay? Which it looks like it's doing here, right? This is sneaking through. We're at a resistance. It refuses to sell off, right? And each day we pull this thing up, it's just a little higher. It's a little higher. I mean, today this thing's at 12,581, right? It's been having a hard time pushing that 12.6. Okay, right, whatever. Then here's what you need to realize. And you were supposed to be in the optimistic time of the year and blah, blah, blah. But in my opinion, this is very suspect, okay? This is what's going on here. Can it inch its way through on some, maybe the semiconductors can push it a little further. Maybe, energy may push it slightly further because, the S&P particularly has a decent weight in energy stocks. Thing is, this zone, right? Where are we here? 12,424 to around that 12.7 area. That entire area is a vulnerable area. So just because it's trying to inch through here is not a great thing, okay? This is not a place to be excited about stocks or aggressive about stocks or, there's so much opportunity. This market's so strong. I keep watching the mainstream news and they keep telling me to buy. Kramer told me to buy Bitcoin and gold and this and that. No, okay? This is a very vulnerable area. That's not a place to be excited. This is a place to be cautious, okay? Does that mean we should avoid all stocks? No, there'll be some opportunities. And Andrew's very quick about rotating in and out of something if we have to or whatever, because, he's very aware of, what can go on in such an area. The areas we need to be excited about are here, okay? Something like that. Sure, that's the middle of the range, but that's a lot better than where it is right now as far as, putting on stocks for more than a few days. You want to carry something for a couple of months or whatever, or a year, like longer term, this is really not the best place to do it. So a number of ways to compensate. For one, you should be probably putting on smaller size. Because again, if there's going to be a pullback, typically they come out of nowhere. Charts aren't going to warn us of the pullback. We have to recognize the probability of the location, which is invisible. Most people don't even think about that when they're looking at the chart. They're only looking at the recent few candles, which is called recency bias, and they're like, this thing should go higher, right? And plus, the news told me it's going to go higher too. So yeah, right, yeah, okay, cool. But this area is vulnerable, as we've seen before. So even if it tries to sneak through, there may be some news that kind of pushes it forward, but it's just too risky here, okay? You want to buy into weakness where everyone's banging it out, where people are getting shaken out. That is how the professional operates. The professional doesn't follow the herd. The professional anticipates the herd, okay? So if they're all buying up here, we have no choice but to be extremely conservative and wait for support. The support on the NASDAQ is, near this November low here of 512. That's a long ways from where we are right now, okay? So that's really the highest quality support. We may not get that. We may get something higher than that, but we have to let the market provide it for us. We're not going to sit here and chase something like this. I don't care how hard it tries to sneak through, okay? Like I said, back in August, if you look back in August, right, look at this. Look at the August move right here. Talk about sneaking through, and it looks like it's going to look great forever, right? Oh man, this thing's going to go up forever. Look at this, blah, 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 blah. And then out of nowhere, big red candle, right? And then the thing gets hammered. That's what you have to watch for. That's where the buying opportunity is. Now, of course, as it's occurring, people are like, oh no, I'm staying away. The stock market's horrible. All these stocks are going to zero. But that is the time when you should be looking for opportunities, whether it's short term, like a swing trade, or even longer term. That's the best time for longer term because people are banging it out and you're getting it cheap, right? And you're getting much higher probability locations for things to go your way sooner. All right. So I just wanted to mention that. And look, and at the same time, let's take a look at that S&P 500. Because as we saw, the Nasdaq looks one way, right, which is basically weighted in tech stocks, and obviously the tech stocks are doing a little bit better today than the S&P. Look at this candle. So this is how the S&P is going to close, right? We're minus 390 or 3.9 points or whatever with this doji type candle inside the reversal zone. That's horrible. Okay. With the NASDAQ doing what it's doing, this thing should be doing better. So this is definitely a conflict, all right? And the S&P is a pretty heavy weight, obviously. So I would be very careful. That's definitely not a bullish sign, what's going on up here. I wouldn't go nuts shorting it either, because again, it could sneak through, right? In these situations, you need to see a break of some kind of supports. The most minor supports are the previous day lows. Right, so today's low would be for tomorrow, 36.73. The day before, which is Friday, 36.67. Right, basically 36.50 needs to be cleared, and this thing is probably putting in a bearish leg at that point. Okay, and I would imagine the Nasdaq will be right behind it. So I just want to point those things out and cover those things. Let me see how I'm doing with time before I start rambling. Wow, I'm a little over where I want it to be. All right, no problem. So let's get into your questions and the chat and the stocks that you want to see. Now, so I think I pretty much addressed things about the Santa rally and what we should be cautious for. Again, if you have any questions about that, please put it in the chat. Okay. So, and before I continue, one more time, make sure if you're new to the Greenbridge channel, make sure you subscribe to our channel. Also press the like button if you like the video that I'm doing, and check out our website, greenbridgeinvesting.com. We have a 7-day free trial for swing trade signal service. We have chat room, and we have portfolio management ideas, okay, by email. And our prices are going to change. So if you want to lock in the prices we have now, you still have a chance. Okay, so let's go to the chat. Let's see what's going on here. Oh, yeah, by the way, tomorrow's Tuesday. We have our podcast at 4 p.m. Eastern Time, Talking Markets with Mark and Andrew. Make sure you check that out because we always have a variety of things on there as well, and gives you another chance to ask questions, especially about markets more on a fundamental perspective, from a fundamental perspective. Henry and Andrew get more into that than I do. Okay, so let's take a look here. So first we had Michael, right? Because Michael's clever. Michael asked his question in our active investor chat, so I have to answer that one first. See, Michael anticipated the crowd. Okay, so now, so he's asking about this one, right? Wow, he's been in this one for a while, and Virgin, we all know this one. Andrew's talked about this one like 1,000 times, back when it was like at $7. And wow, what a move on this thing today, right? $4 vertical. Okay, so first, in these situations, if you're not in it, right, you need to stay away from it because you don't want to buy it when it's vertical. You want to wait for a pullback. The first support on this thing is around the $26, 26.5. Old resistance becomes new support. That's the first place I'd be looking if I was going to buy it. That's where I'd be looking for it, right? Not here. Secondly, if you haven't locked some in at this point, you should definitely lock something in. So if you have 100 shares, you should definitely take off 15, 20 shares just to capitalize on the herd piling into this thing. Okay, so now the other question he had was pretty much like targets. Where should he be anticipating this thing can go? Well, at this point, when something goes vertical and you're in it, and there's no sell signal at all, there's just nothing there, you're going to let it run, right, after you've locked some in. Now the goal is to let it run and see how far it goes. So you can either wait for a sell signal that can just come out of nowhere and then make your adjustment there, whether that's exiting or maybe raising a stop, so that if it pulls back to a certain point, you just get knocked out based on whatever the market determines. But as far as targets go, I mean, this thing is obviously on its way up to these old highs. The high, this thing's, I guess, all-time high is 42.49, I guess. Let me see. Yeah. So it looks like it's on its way up there. That $40 area, the 37.74, probably going into that $40 area, you will likely see resistance there, right? So that's one area to consider as a target. Obviously, the all-time high is also going to be a target. So if you're going to use that as a reference, you want to put your order slightly lower, maybe 25, 50 cents lower, because everyone is going to put it right there, right? So you want to put it ahead of where all the other orders are so that you're more likely to get filled. You're not going to, don't go for like the top because you're never going to get the top. Now, in those situations, so let's say you put a target at 37.5 and you put another target at, 41.25, let's just say, okay, and you still have 15, 20 shares left. Try to let it run. Okay, now I don't know if this thing will go there in a vertical move. It might not. It may fool around and work its way up there. If you still can hold on to some, and that's where it becomes like a long-term investment. When we talked about how, a stock like this is a nascent industry, and there's a lot of potential here. So these things can go and they go. Why not hold on to 10 or 15 shares for the long run? Just no matter where it goes, you plan to hold on to it for a few years, no matter what. So if it pulls all the way back, you'll have an opportunity to buy back some shares, but you still have that core position, right? So I would say as long as you're out of most of it, or a good portion of it where you've locked in profits and you're happy with that, 10 or 15 shares, it's a high potential company. And we all know who runs the company. I mean, he's a high potential guy, right? I mean, he makes things happen. So you're betting on the guy. We talked about that a long time ago. So I would give it that chance. Something like this. If it goes all the way back to where you bought it, well, at least you locked in profits at these great prices. At least you locked something in. So that's how I would play something like that. This is a great example of a stock where it starts out perhaps as a short-term trade, and it works in your favor, in your way, it works in your favor, what I'm trying to say. It works in your favor in such a way you can transition from a short-term trade to an investment, right? You want to do it while it's going with you, not against you, which is what a lot of people do. They get stuck in something going against them. And they say, oh, you know what? I'll just hold it and it'll be an investment. That's a bad idea. Okay. But when it's going your way, it's not a bad idea. All right. So that's it. Thanks, Michael, for asking that question. All right. So let's go here. DKNG. Is that DraftKings? DKNG. I always confuse that with Dunkin' Donuts because, I love donuts. So DraftKings, yeah, they got real big because I guess, people are gambling from home because they don't have jobs or whatever. And so the first thing we want to look at are old resistance, new support areas. This is an old resistance right here. So that 44.5 area, I would be anticipating support there. You have this lower high that was established here. Now, what does that mean? Well, here's the thing. I can see some support, right? That's a support coming up. You have another support coming up around here, which is what, 34, what is that? 34, basically 35, just below 35, right? And then you have some resistance up in this area, okay, which it basically failed just before. So in this situation, right, I would be anticipating a broad consolidation. Just because it's a lower high and it's pulling back a bit doesn't mean you're going into a bearish trend. This thing needs to take out a major support, okay, to even think about that. And that's all the way over here. Even then, it could take it out slightly, give you a failed low. It's kind of like what gold recently showed us. I forgot to take a look at gold. We'll take a look at it. But similar to that, and that's a great buying opportunity, right, in this area where you get a failed low off of a broad consolidation. Right, but that's a long ways from here. That's, 35. This thing closed today at 47. So, that's really not in play right now. So if anything, if you're not in it, I would wait for this 44.5 support to be reached and see how the price action develops here. Because today, I mean, there's no reason to get into this. It's closing week, right? We have 30 minutes before it closes. Lousy close, no good. I would not give any credibility. This is a very minor support right there. I wouldn't trust that support. I'd want to see more of this one here, the 44, perhaps 45 area. See if you can get stability there, maybe like a pin bar or something there. Something, okay? And that might be worth giving it a try. You could also measure your risk once the structure is in place. And at that point, I would look for this recent structure, this recent bullish structure from that November low. I would be looking for that thing to test this 55 area. Needs to clear it though too, right? If it makes like a slightly higher high and can't go much higher, then you're looking at probably you're in a range bound situation. So if you manage to buy something near this low and you can get out somewhere up here, that's an ideal swing trade, okay? If you could do something like that. But at this moment, there's no reason, although it's getting into an attractive location. It's getting there. So thank you for bringing that one up. That's how I would be looking at that one. Let me see what else we got here. Okay, so HS, what do you think of BAND, LINK, and XRP? So let's take a look. So BAND, USDT. Now, okay, so again, this goes back to the Bitcoin situation. Now look at this, right? Back in August, everyone wanted to be in BAND, and it gave you a double top, and since then it's been kind of out of play, right? Again, keep in mind, these things are very driven by news that's maybe very unique to the company a lot of times. So that makes them very, very speculative and very hard to use technical analysis with. Because for one, this one's not doing well in terms of Bitcoin, not doing well, right? Bitcoin is pushing its 20K high practically, and this thing is nowhere near its high, right? This thing should be up here somewhere, at least close. I mean, we took a look at Litecoin, right? We know where Ethereum is. They're near their highs, where they should be, okay? This thing is here, struggling with this resistance. That's a sign of relative weakness. So again, it doesn't mean that it won't eventually catch up, but I don't like these. I don't like coins that aren't, there's no way to gauge their strength. And if Bitcoin is the lead and this thing should be following Bitcoin, that means it's relatively weak, which means no money's flowing into it, which means if anything changes, it'll probably be a function of specific news that comes out. And since I'm not an insider, and since I can't pay for that inside information, which is perfectly legal in this space, I don't know when we're going to have that great move, right? And I can't really rely on a chart to tell me either, okay? Since there's people out there that have a huge advantage over me and my charts, at least in a market that's more regulated, like stocks and everything else. Things are, even though there are others with big advantages, we have more of an advantage, okay? We have this, we can line things up more in our favor, where in something like this, relatively weak, I don't like it, okay? The recent structure, yeah, you can argue there's a higher low, it's trying to break out, bullish candle today. Sure, those are all bullish signs, but what if Bitcoin pulls back, okay? Where is this thing gonna go? And Bitcoin is in an area where it's very vulnerable to a pullback. Since this is relatively weak, I would suspect that this thing is going to test its support and perhaps make a lower low, right? That's what I would suspect based on the way it's behaving right now relative to Bitcoin. That's all I can go by, okay? I'm not an insider of the company or the coin or whatever, so I don't know what's really going on, and it's going to be hard to determine that from a chart, okay, when in this type of situation. So that's the way I'd look at that right now. Again, some piece of news can come out, and next thing you know, it's up a ton, but chart's not going to help us with that. So that's BAND. LINK. So LINK is the same situation, right? Here's LINK against Tether. I know there's some other charts out there that give us a little bit. I guess I'm not getting the exchange here. Let me see. Can Binance? Will Binance give it to me? I think Binance maybe. Let's see. Okay, yeah. Here's the Binance chart. Okay, Chainlink. So again, Chainlink. Look at the structure. So, if you're quick about these and you're nimble and, you're looking for very small profits, a quick move. All right. Something like Link, again, you're getting a consolidation similar to Bitcoin. You break out of this, perhaps it has another leg higher. What can you expect out of something like this? Well, if you look at previous legs, like this one over here, that's what you're looking at within reason. That's reasonable. It's proportional. 1426 to, what is this? What is it there? Let me see. The close that, 1355 to a high of 15. So $2 maybe, right? Something like that. So again, relative to Bitcoin, this thing's not performing well at all. It should be up here, okay? And it's not. So nice general structure. If it breaks out of this consolidation, as long as Bitcoin is doing the same thing, this could be worth a few dollars. It's a better looking chart than BAND, but it's got the same situation where it should be doing better than it's doing. What if Bitcoin pulls back? Where is this thing going to go? Okay, so something to keep in mind there. And now XRP, USDT. Now, again, same thing. We have a consolidation. Okay, now XRP, though, has been performing better relative to those two coins. I mean, XRP had this pop on that Bitcoin move, which is, it's better than nothing. Although, in recent time, going back to May, it's a pretty big move, right? But if we go back further, let's go back further. XRP, USD, right? And let's take a look at its true history. I mean, XRP has been as high as, what is this? $3.30 back in the high of 2018. Now remember, where was Bitcoin at that 2017 high, December 2017 going to 2018? Where was Bitcoin? At 20K. Where is Bitcoin now? At 20K. Where's XRP? Where's XRP? It's at $3. I mean, I'm sorry, not $3. It's at 60 cents. Okay, so relative to Bitcoin, this thing still is not that good. All right, so when you look at it this way, because if it was truly had the same merit and money was flowing into this like Bitcoin, it should at least be pushing that $3 high or somewhere close to it. Like Litecoin made a decent amount back. Ethereum made a decent amount back, although neither of them are at their 2018 highs either. They made significant moves. I mean, so this, okay, that's what you're dealing with. All right, so I just want to show you that to give you some perspective. Now, as far as the consolidation and this previous sharp movement, yeah, this thing is basically bullish. And you break the consolidation, just like Bitcoin, it's reasonable to expect maybe another push, perhaps to $1. Maybe that's within reason. But I wouldn't go crazy with these, okay? Because if you're not involved with a the leader itself, like Bitcoin or something like Ethereum, these things they're obviously, money has not flowed back into them. So they're going to be limited, and they're more of a gamble, in my opinion. Okay, so yeah, the structure's there. You could break out if Bitcoin follows through. I would anticipate something. The dollar is probably going to be an important whole number area. Like I said, going back, there was a resistance back in May of 2019. There was some price action at $1, so that's a good target to work with, on something like this for now. Okay, but like I said, I'm not very optimistic with these. All right, so good question. Hope I answered all your questions there. Pal, hey pal, I used your AUTL for trade of the week, and people were happy about that. Someone said give Pal a cookie. Okay, Pal is probably going to want more than a cookie, for this. So let's see. The trade of the week, you can see on the chart here, was $10.50. Which activated, right? When did you send that out, trade of the week? That was on Wednesday, so maybe a few days back here, around here somewhere, the trade became active, right? Buy stop was $10.50, around there, and the stop loss was $9. Did it ever go to the stop loss? The lowest point was $9.32. I don't even know if this trade was active. It may have been active on that day, but it never touched the stop. And now look, right? So today this thing closed at $11.78. The high, today's high, is what? 1180. Actually, it's not closed yet. It's on its high. 1180. So target one is 1250. All right. Well, it's on its way. Okay. So nice call, pal. Nice failed low situation. I mean, the structure and the setup paid off. Right. There's a reason why we look for things that look like this. All right. The failed low, the broader higher low situation. Even at the moment when we sent it out, it didn't look that great, right? The stock wasn't doing anything spectacular. When it does something like what it's doing right now, this is where all the Robinhood people start piling in, right? And that's what we want. We don't want to be one of them. We want them to push it higher for us so we can go to our targets. Now, as far as where this thing, again, vertical, nothing to do here, right? If you're not in it, you can't chase this. You have to let it do its job, right? And start reaching its targets. So hopefully, perhaps tomorrow or the next day, this thing can touch target one. But you don't want to chase these. So nice setup there, nice broader structure. That's really the lesson that you should take away from this. Broad higher low structure. There was really nothing bearish about this situation, although if you just isolated this and looked at this like on an intraday chart, you may say, oh yeah, stock is bearish. Not bearish at all relative to the move from March to July. And that's what's still in play. So nice job there. Nice job. Okay, let's see what else we have. SNDR. Oh yeah, I remember this one. Called this one a while ago. And didn't do anything with this. I think you called this one back here in October. And so this one, or I mentioned it, I should say call it. You mentioned it. And now look at this thing. Okay, so it's gone lower, and there's the consolidation, right? That's what we want to see. Failed low. It's struggling here to hold that support of, what is that, 2092? Okay, around, so basically 21. Now, how does that level look relative to historical price action? Let's see. So you have a support back here, which goes back about a year in that same area. So you have some supports there, okay, and it's trying to give you the little mini failed low, basically just the other day. So yeah, this is a good candidate. As you saw, very similar to AUTL, very similar structure, right? Similar situation. Nice bullish move previously, gave a good portion of it back, probably about 50%, gave it back, and now it's starting to turn, right? It's giving us the structure. Now, is it giving us a setup and confirmation? Well, yeah, we have the failed low situation in there. And it's trying, right? The confirmation basically, when I see a bunch of these little pin bars like this, I would probably give it a little more room to let it prove itself. So 2135, I'd say like 2150. Let's see, what's today's high? 2143. All right, like 2150 would probably be a good entry price for this, right? Make it work a bit, right? This thing's at 2114 right now. And the low on this thing is 2063. So you figure you're going to give it a stop of maybe 20 and a quarter, or even give it more room, 19 and three quarters, something like that. Just give it some room. So you're risking probably about $1.50 to $2 in that situation. And there's plenty of potential here. I mean, even if it makes it halfway up its range, you're at $25. So you're looking at $4. You're risking about $1.50 to make about $3, $3.50, maybe $4. That's good reward risk. And we're talking just halfway of the range, right? We're talking about just it getting back to here, which is very within reason. We're not even talking about new highs. So I'd be open to that. This one might be a good one for options as well. I don't know what the options are. I haven't looked, obviously. But 6 months out, $25 calls. If they're less than $2, maybe $1.50. If they're less than $1, it's even better. Okay, that would be deep out of the money. You want to buy a lot of time on these because, as you can see, from October till now, which is about 2 months, okay, this thing basically went from 27 to 20, moved $7 in 2 months. That's a slow mover. So you need a lot of time, okay, which means the options are probably going to be somewhat cheap. The goal on something like that is if you're spending $1 or less on something like 6 months out, or even longer if you can, the goal is to try to make maybe 50 cents to $1 on something like that. Okay, that's all you're looking for, because it's not going to be like a Jumia. All right, Jumias are a different type of stock. You need like a low float stock that moves like in crazy ways. This is not one of those, so it's just something to keep in mind. So thanks for bringing that one up. I hope that answers your questions. I like S&DR. We may have to steal this one. I don't know. If Andrew can't come up with something better, we may have to, or if I can't find something better, I may have to resort to yours there, pal. We'll see. I don't want to keep using yours every week though, because then you're gonna take over my job. But you can if you want, because it'd be nice if I could work less. Anyway, but we're not going to pay you anything. All right, so let's see what else we got here. Urzo, okay. Hey, nice to see you, Urzo. All right, Alice, can you take a look at UNFI? In it for free. Just looking to trim levels. Have mine set. Okay, let's take a look. UNFI. United Natural Foods. Okay, not familiar with them. Now, let's take a look at the levels. Okay, how am I doing with time? Because I like to over talk. All right, 44 minutes, not bad. All right, supports. We have here 14.5. Support, we have resistance right around here at 21, basically 21.5. We're around that number a bit, and we're right in the middle of that range. Okay, so Alice says that he's in it for free. and is looking to trim. Okay. Um, have mine set at 11, 16, 22 based on fib extension. Okay. 11. All right. Now this thing is at 18, so I'm not sure what you mean by 11, 16, and 22. Is that where you bought it from? Or I don't understand. Have mine set at 11, 16, 22 based on fib extension. Yeah, so I'm not sure what you mean by that. Maybe you can explain that further. But based on what I'm seeing here on this chart, if I have the right symbol, let me make sure. Yeah, UNFI. Okay. So you're in the middle of the range. If you haven't locked some in, if you're in from lower prices and you haven't locked some in and you're profitable on this, it doesn't hurt to take some off at the middle of the range. It doesn't, because anything can happen. When you're in the middle of the range like this is like a 50-50 area. Okay. This is where it's like a, you could flip a coin and the coin can tell you which way this thing is probably going to go, right? I mean, it's 50-50. It's very random. So it's a good idea if you're in from lower prices to just take something off the table. If you have 100 shares and you're like, well, I think this thing's going to go higher. Hey, sell 10 shares, sell 15 shares, lighten up a little bit, right? If it pulls back, you can always buy those shares back. Okay. Now, as this thing gets near that 21.25 area, that's where I'd be looking to partial out of more. Like, you have some resistance right around here because obviously it tried to push $20 back in October and it sold off, dramatically off of there. So that might be another place for a trim somewhere around there. Okay, then you want to see this thing test and break that resistance at 21. You want to see those 22s start getting pushed, right? Going back to these May highs over here. What is that? 23.25 basically. You want to see those numbers tested and pushed. If it can't, that's another place to trim. Okay, those would be good places to trim based on historical, price action that we actually see reactions off of. When you're using projections, they're going to give you a general idea of what might be within reason based on the structure you're seeing now. I mean, that's what the projections do. They're giving you proportional points based on previous proportions. So it's saying that, hey, if this stock stays in this structure, then it's within reason to see these targets, right? Or these prices. That's what a projection is telling you. So without using a projection, I would be looking at these actual points, okay? And if it pulls back to the range low, like here, that would be a place, or even near the range low. These would be places to maybe pick up the shares that you sold, right? If you locked in some profit and it pulls back, hey, I can buy those shares back. Why not, right? You're buying into weakness. You've locked in profit, so it's working with you. If it breaks the support, then I'd be careful. I wouldn't be going crazy, putting on more and more until it starts to show stability again. But right now you're in a broad range. The previous structure is bullish from that March low to the May high. So I would expect that this thing would break out of this consolidation to the bullish side, based on that structure. That's what I'd be anticipating. Now, that's a nice change compared to where it's come from. Look at this. Look where it's come from. This thing was as high as $50, okay, going back to 2018. And it gave it all back pretty much and turned around recently. So this structure needs to stay intact and it needs to break that high. Otherwise, I would be careful with something like this, okay? So thanks for bringing that one up. I hope that answers all your questions. Let me see what else we have here. Okay. I need to learn options because honestly, I have no idea how this works. Oh, well, HS, real quick. If you go back, you're a member. So if you go back to our webinar library, we have like 3 options webinars that you could watch in there. We have 2 of them that are on basic options, like how calls and puts work, and then the strategies that we employ, whether it's buying calls or selling puts. We talk about that, or covered calls. We talk about all that, and we try to make it, our goal is try to make it as easy as possible to understand the concepts. So definitely watch those videos, right? There's 2 of those. And then there's one where I talked about options orders alone, just how to place the orders. That's 3 hours of training right there. So if you go back to our library, just click on the webinars, go to the chat room, the webinars button, they're in there. Okay, so that will help you a lot as far as getting an idea of how they work and how we use them. Because if you Google options, I mean, it could be overwhelming, and there's a lot of stuff out there that can confuse you. So it's good to keep it simple, and the strategies that we employ are very simple, and they work out well when they work. and they don't work. The great thing about options is the limited risk, which is a key thing, okay? And you don't have to worry about stop orders and all this other stuff. Okay, so let's see what else we got here. PLL. Okay, Andrew wants to see PLL. All right, Piedmont Lithium. Oh, this is one of those energy, I guess, you know, battery energy, electric vehicle situation type of stocks. PLL. Look at this. Okay, so again, these are going to be highly speculative. Nice, nice pullback, right? Nice pullback off of this area. Let's look at some support and resistance levels. So you have a support right around here, 2180, and you have a consolidation right now, okay? Higher low consolidation, and you have like this double bottom going on in there. What is that? 2389. So basically, we can even say 23 and a half just to give it some room. Okay, not bad. And we have this little pin bar, not pin bar, I'm sorry, inside bar, or sort of an inside bar that has developed today, right? This thing closes in 5 minutes. So, well, not bad, okay? This may be a good competitor for trade of the week, especially since this thing, when it moves, it's proven that when it moves, it moves. I mean, this thing went from $6 to $50. That's definitely a mover, all right? It's probably a low float stock. I don't know if they have options on this thing, but definitely you have a higher low situation, a break of this high, 2682. So basically pushing 27 would give you a buy signal. It's not the best buy signal because you're still inside the range, but it is a buy signal, and your risk would be defined by the range low, which is, what is that, 2389. So you figure 2350 area. What you need to see this thing do is clear this level, the range high, 3189. Okay, so I mean, you're probably better off buying that first buy signal. That's the lower risk compared to if you have to buy the attempted breakout at basically $32. It'd probably be a good idea to be in it before it does that. Okay, so yeah, I like, definitely it's a mover. It's definitely a mover, and it's been out of play for 2 months, that's what we like to see. We don't like to see stocks that are on everyone's radar, that, you know, Kramer's talking about and the thing is vertical, because that's the herd mentality. We want to get in before Kramer starts talking about it, before it shows up on all the day trader radars. This is one of those situations, right? So I like it. I definitely like it. PLL, okay. And I don't know if they have options on this one, but if they do, this one would probably be a good, this is like a Nikola, you know, type of situation, where those Nikola options, before Nikola got hammered, those options were looking pretty good, okay. So yeah, I like it, PLL. And by the way, before I forget, let me just pull up gold real quick, okay? I want to mention this gold situation. The reason why I want to talk about this, we can't do anything with this now. I was hoping to send out a trade on this, but as you can see, it never gave us a clear signal. I mean, this pin bar was a possibility, but I wanted to see something more precise, and maybe it was my fault for being too conservative. But here's the thing. Gold, as we've argued over and over again, it was not in a bearish trend. Okay, in fact, I think we even talked about this in my webinar, because when I did my webinar, like whatever, a week ago, gold was over here, right? Where that blue box is. Gold looked like this in the webinar. And I asked people, I said, is this thing in a bearish trend? And some people said, yeah. And some people said, no, it's not. And the answer was, no, it's not. It's not in a bearish trend. The momentum was bearish at that moment, but it's just at the extreme low of a broad bullish consolidation. How is this bullish? Well, if you zoom out, the structure that's in play is this structure. Nothing bearish about that. And as we know, fundamentally, there's really no reason for gold to be bearish, okay, with all the stimulus and dollar printing and blah, 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 and all that other stuff, right? So it was just a matter of time before it caught up, and now here we are. Now gold is going nuts, and we can't really do anything with it. Okay, no problem. But as I answered in the chat room, someone had a question about this in the chat room. You know, is the bottom, is this a short squeeze on gold? And can we say that the bottom is in? Well, yeah, because for one, it's an extreme low of a bullish consolidation. Okay, so that's good. Now, what I want to see next is the higher low. The first higher low that we get in this thing, you know, it's going to be good for gold stocks and obviously the CFD. Okay, so I wanted to mention that because we see a lot of stocks in this same situation. And you want to get used to seeing that. Okay, so I just want to mention that about gold real quick. Okay, POW, DQ, which is Chinese solar. Okay, let's take a look. Oh, that's interesting. So we have a consolidation. This is back to solar. Hey, speaking of solar, here, before I go on the levels, how's Sunrun doing? Let's see, is it getting better? Okay, it's trying. This was also a trade of the week, and it was doing well, almost reached target one, and now it gave us a hard time. But it's hanging in there. I'm sticking with this, okay? So back to DQ. So similar situation, but here, DQ, so it was strong recently, right? Nice push here in October. All right, overall, nice push since May, right? Look where it's coming from. This one was basically at $10, and it went as high as 40, what is that? $48, and it found its resistance up there at $48. Wow, that's a nice move. So right now, it's at this range low. It gave us a pin bar today, right? You have this situation, nice triple bottom situation there. Overall, you have a range consolidation, right? This area right here is a nice consolidation range, and you're fooling around a range low. I like that, and you have a pin bar. So this would be a candidate for a swing trade long. Break of this pin bar high is $39.97, so you're looking at $40. A break of $40 tomorrow would basically justify this thing for a long. Now, the risk, you have to look at the pin bar low, 37.07. So you figure 36.50. You have to give it some room, okay? If you're buying it at $40 and your stop is at 36.50, you're looking at $3.50 of risk, something like that. And a good target would be the middle of this range if it can get there. What is that, $43? Okay, so that's one-to-one reward risk about there. If it could touch the range high, that's even better, right? So that's a pretty good candidate for a swing trade long. I like that. Definitely like it. I like the higher low. I like the broader structure. All the factors are there. Okay. And the risk is clearly defined. So yeah, definitely DQ. So that's a good one. We have to steal that one too. And we can't steal all of them, pal. So PLL so far, I mean, I like PLL a lot because it's a squeezer. It's one of those things that can, go nuts. But DQ, I have to look at the options on this one if there are options. Okay, nice. Thank you for calling that one out. Thank you for mentioning that. Peppy. Hey, welcome, Peppy. Thanks for joining us. Appreciate the support. Is there any chance you could look at Australian stock for me? Sure. I'm in from 14 cents. Not sure how and when to exit. Okay, AC8. Let's see if if TradingView will give that to me. AC8, and I want to, hold on. AC8, and I have to find the Australian Stock Exchange. Let's see, so I want stocks. ASX, right. What it's giving, is that AC8? Yeah. Looks like ACB, which is a cannabis stock. Okay, wow, look at that. Looks like it's moving like ACB. Okay, so Austin Group Holdings. You're in from, you said 14 cents. Okay, 14 cents. So let me just mark that on the chart here. Let's just put that on the chart. 14 cents is over here somewhere, right? So wow, nice entry, real nice entry. Okay, and your question is, you don't know where to get out, how and when to exit. Okay, well, very simple. Right now, at this moment, it's vertical. So at this moment, a good idea in these situations, for one, is to take something off the table if you haven't. Okay, remember, as I tell everyone in these situations, you're never going to sell the top. So even if this thing doubles or whatever, I shouldn't have sold any, I was so stupid. You cannot think that way because it can go vertical and give it right back, as we know. So you want to capitalize on this situation. Now, I'm not saying you get rid of a large portion. You get rid of a small portion. So if you have 100 shares, sell 15, 20 shares. There's nothing wrong with being in the habit of locking in profits, no matter what price. I tell this to people all the time. If it's vertical, lock something in. You'll be happy that you did in the long run, okay? Even though you might not be selling the top, which is like, playing the lottery. So that's the first thing, right? Lock something in, reduce your risk. Okay, cool. Now, the rest of it, you say, well, it's probably a good idea in this situation to figure out some fixed targets, places, that you can anticipate selling activity may enter. So you want to look at resistance levels. Okay. ACA is also a cannabis. Is it a cannabis stock? Well, they were probably trying to copy off the ACB ticker because I'm like, that looks like ACB, right? They probably copycats. Okay, they probably say, well, people will be confused. They'll think they're buying ACB. All right, now, so you want to find physical or you want to find historical prices where there have been reactions before, right? So that's what I'm doing here is I'm highlighting areas where price had reacted previously because prices do have a memory, all right? That means there are participants there who are caught at those prices and they're very happy to get out for break even. So they become, they add to the selling pressure, right? So here's the thing. Right now, based on that situation, right, you also have a level right here. You have an old support, right? New resistance right around here. So 26 cents. So here's the thing. So you have a couple of potential targets here, right? You're almost at one of them. This thing closed at 24 and a half. So 26 would be one area to consider as a target. If it just cleans through it, maybe what you do is you put a target in between the 26 and the 32. So what would that be, like 29, 28? Maybe that would be a good place for a target, 28. You know, if it, because it may just clear right through that 26. If it stays vertical like this and can keep this momentum going, I mean, look at the close here, 24 and a half. So I would give it that chance, especially if you locked some in. Okay, then you could be more of a strong hand and hey, let this thing ride. It's a winner. Target somewhere around there, and then another target perhaps around that 32-cent area. Since it was a previous resistance before, you probably are likely to see selling activity. So you don't put it at the exact number, you put it slightly low, slightly lower. You want to get out before everyone else puts their orders in, okay? And then if you get through those and you still have some, you know, then you're looking at this area up here, the 38 to, what is that? 40-cent area, up in that area. Those would be good places for targets. Now, I'm going to use 100 shares as an example. So let's assume you've locked in 15 shares, okay? Locked it in, you've reduced your risk. Great. Perhaps you put like another 15 for sale, you know, around that 28-cent area. Perhaps you put like another 15 for sale. You basically put it out in numbers that, you know, are sort of even. Or let's use 20 shares. It's more of an even number. So you've locked in 20, right? You put another 40 for sale at those two prices. And what that means, you have, 40 shares left at that point. Perhaps you put another 20 shares for sale up here in that 40-cent area. And if it clears all those and you've reduced your position by all that, that means you still have 20 shares left at that point. And if it wants to keep going, you have 20 shares, right? And you let it run. You can't feel bad about, I had 100 shares. I could have sold it all at 40 cents. That's where you're asking for trouble. I can't tell you how many times that type of mentality leads to losing money, not making money. Okay, so the idea is to control risk and reduce risk while you have the opportunity. That's how you make money in the long run. So I hope that answers your question. So good question about that one. Pow, no cookie. Just happy to share. Okay, Pow, no Pow. I'll let him know. No cookie. So Christian wants to know, Schneider good for a long. So that was SNDR. Yeah, so I answered that question when we talked about it. I like the idea. It makes sense. Just keep in mind, SNDR is not a fast mover, right? You're not going to see a Jumia type of move out of this most likely, especially when it took 2 months to move $7, right? So it may take, if it took 2 months, it may take 1 month to move halfway to that point, assuming that nothing dramatic changes, right, in something like this. So just something to keep in mind. I mean, look, the March low, right? What's the March low? 1575 to basically what, the October high or something like that. March to October, what was that high? $27. So we went from a low of, so it basically moved almost, well, just over $10 in like what, 6 months or something, 5 months. That's a slow mover. So you have to keep that in mind with the stock, okay? But yeah, the setup, everything is there. You can define the risk. You have a setup. It needs to take out a high though, 21 and a half. It needs to accomplish all those things. And then you have a potential idea in play. If you want to, you know, we haven't, obviously we're not officially calling that at this point, but if you want to take it upon yourself to, you know, manage that, That's up to you. But yeah, that was a nice one from Powell there. He was the one who brought that one up. Powell, short GE for a small bite. Short GE, don't tell Andrew that one. He's not going to want to hear that. He's long a ton of GE from like $7. I remember when he used to talk about GE like a year ago, and I'd be, GE, who trades GE? That stock sucks. Right? Oh, yeah, I'm going to buy it and keep buying it. Well, he was right. Look at this thing. Okay, it took forever, but yeah, I wouldn't short GE. Even though you got the pin bar, I could see why you'd be interested in it. But pal, I'll tell you what, if you want to short something, you want to short something that moves, right? Something that's going to deliver right away. Because I mean, to really make any money with this, you're going to have to short like 1,000 shares. You know, like what are you going to do with this thing? I wouldn't expect a significant move. For one, this is a clean energy play, right? This is like a renewable energy play. Since they're like a leader in the space. I mean, Andrew's talked about the fundamentals on this thing forever and ever and ever, and they pay dividends and all kinds of stuff. So yeah, I wouldn't short this. Okay. In fact, Andrew has a similar company. Well, not exactly similar, but Caterpillar, right? We have a short in Caterpillar. We were trying to play the same type of idea, pal, and it hasn't been working very well, right? Caterpillar has been giving us a hard time on that short. And look, we shorted it. It's a counter trend trade. Short of the strong stock based on this price action here, and it's still not delivering. So I would be very careful with something like GE. Find something with more potential. Okay, what has more potential? Well, here's a crazy one, which actually doesn't really look like a good short right now. But Shopify is at this range resistance. As you can see, when it pulls back a couple of hundred points. It's $1,000 stock. So, you know, yeah, it's you know, you have to have either some money to do this, or, you know, you can only trade 1 or 2 shares or whatever. But if it pulls back, you know, halfway to that range, it's a couple of hundred points, right? And that's not even like a real pullback for this thing. So that's, you know, that's one idea. Although if this thing breaks out, you know, you're asking for trouble, and it is definitely a strong stock. When it comes to shorts, typically we prefer to do things like the Qs, which again, it's got that slow push through that resistance right now, no sell signal, but at least we don't have to worry about some ridiculous gap, right? The Qs are probably not going to gap higher by 10 points the next day. That's why we rather do something like that. Perhaps the S&P, you know, the SPX, you short something like this, at least it's giving some hesitation at a reasonable level for a short if you're into something aggressive like that. Okay, so that's how I would answer that GE question. Okay. Yeah. Okay. Anyone shorting break of that pin bar? Yeah. Like I said, because GE is not really, you want a potential mover. Let me just try to think if I could think off the top of my head. Obviously, I haven't been shorting much. I'm just trying to think of something that could be an aggressive short that moves. Not even Roku. Look at that. There's nothing there on Roku. This stupid stock just keeps going higher and higher. What's another one that can move? How about Square? How's Square doing? Let's see. No. Yeah, I'd be careful on the short side there. Okay, if I could think of one at some other point, I'll mention it. But yeah, don't pick S&DR this week. Too much pressure on me. Yeah, no problem. I think PLL is going to be our choice. ACB, okay. Pow, I have to say I was a little nervous after you called AUTL for the trade of the week, because it was low volume. Okay. Well, yeah. So, yeah, Pow, you know what? If you give us an idea for trade of the week and it doesn't work out, we're not going to, that guy Pow sucks, man. I'm never going to call one of his trades again. Why the hell did I listen to him? I'm not going to say that. You know, it's our choice, right? We make the decision if we think it's worthwhile to put out or not. And we're very mindful of what we put out. You know, we're not like some of these other people out there that just put out anything just, you know, for attention. We want to put out something that at least has potential, and most importantly, that has a reasonable risk, because many of our members are new. Many of our members are coming from like the Bitcoin space. They're not very experienced with stocks or options and things like that. So we're not going to put nutty things out there. And we always make sure that the risk makes sense, and we always make sure to highlight that risk. What kind of risk are we taking? Or what kind of risk are you taking in this type of situation if you take such an idea? Because I encourage people to take trade ideas on their own, whether we call it or not. But you need to get used to managing the risk, right? Because that's really the main skill here. You get good at that, then profit is basically a byproduct. A good performance is a byproduct of good risk management. I wrote that in my TradingView article yesterday. So I think I answered everyone's questions, and it's about time because I've gone over my time here. Any other questions? I think I got everyone's questions. If I missed your question, please just ask it again. Good questions, everyone. I like to see the participation. Any other questions? Remember, tomorrow is Talking Markets with Mark and Andrew at 4 p.m. Eastern Time. And again, the value of that show is, you have Henry and you have Andrew on, and they infuse a lot of the fundamental perspective into my short-term technicals. Because again, I'm very short-term oriented and I talk mostly technicals. I don't talk much about fundamentals because that's not my specialty. So they bring that, that portion. And so that's why it's there's a lot of value there. Plus we try to cover as many markets as we can. We spend a lot of time on the stock market and we spend a lot of time on Bitcoin. Okay. So cool. Any other questions? So if I don't have any other questions, I'll leave you with Bitcoin. Again, as you can see, Bitcoin is getting heavy, right? It's getting heavy. And the lesson that I would like you to take away from this is the reason why we use stop orders to enter such a trade is because the market needs to work to get us into the trade. What many people do, and I see this a lot on public forums and stuff like that, where people are sharing ideas, they put what I like to call a reactive trade out there. They say, okay, I'm buying Bitcoin at this price. Why? Yeah, because I think it's a long. Okay, that's not good enough, because that means you're reacting to information, and that's not going to be a good behavior relative to the randomness that we constantly face in the market. So we like to use a stop order because that means the market needs to do something. So we're not reacting. Our order's set out there in place. As you know, I sent out that trade yesterday, okay? All of our members had the opportunity to place that order in advance, and they could just sit there and wait for the market to touch that order. And that's it. Your work is done, right? You put in your stop. Not every platform allows you to do it nice and easy like other platforms, but the point is you have your orders in advance. There's no reacting. Either the market's going to do something with that or the market is not, okay? As opposed to if I just sent out an order, okay, we're going to buy Bitcoin at 19,200 because I like it and I think it's a good long from here. And now this thing is fooling around at 19 even, and it may break the support and go lower, right? Meanwhile, we don't have a trade on, all right, because our trade never activated. So that's an important consideration. If you find yourself reacting to stuff, that's not a good habit to be in. It may work sometimes because, again, the market rewards us randomly. And, sometimes when you're starting out, you make some money here and there and you're like, oh, yeah, that was easy. But you don't realize that the rewards are random. Like a casino. You go to the slot machine and sometimes you win. Okay? And people think, oh, I'm onto something here. But you're not onto anything. It's random. So they do that because what does it do? It instills hope. So what do? You put more money in, and then now you're behind. So now you want to make that money back, and you put more money in. Next thing you know, all your money's in the machine and not in your pocket. So it's very typical with trading, especially short-term trading. So my point of that whole thing is you cannot be misled by random rewards and think that you're better at it than you actually are, which is overestimation bias. Anyway, that's from the webinar that I recently conducted on psychology. All right, everyone. So I'm going to leave you with that. I hope you found this video helpful and insightful. If you like the video, please press the like button. Register for our channel here. Check out greenbridgeinvesting.com. We have swings trade signal service by text, by email. We also have portfolio management ideas, which is done very well. And we have our chat room, okay, which Andrew's in there every day. I'm in there posting stuff all the time. All right, so thank you very much, everyone, for your great questions and your participation. And I'll see you tomorrow on the Talking Markets show. Have a great day, and I'll speak to you then. Thank you.